All right, here we are. We're finally back. We finally got this court recoordinated. And for the record, Jake, I'm just going to state something for the record. I need you to back me up here
I'll back you
because
up.
your people trust you. My people trust me. They'll trust us together. We did the last recording.
We did, and it was really good.
It was fantastic.
I was a little bit sad that we didn't get it across the line.
I was sad. And then when I realized that we could do it again, I actually got happy again.
The same. The second time's always better anyway.
I think so. I think we're going to have a magnificent conversation today because a lot of things have transpired since the last.
Yeah. Just a few. Oh, I mean, it's crypto, right? So daily you have all kinds of new things.
Every hour, almost some days, right? It's like new things are happening every hour. So we're going to get into a lot today. We've got we're going to talk about the vision of crypto. I think today we can really hone in on some cool stuff. We'll talk about the vision of crypto. We'll talk about what's next. We'll talk about what you guys are doing, what we're doing. We'll talk about some cool stuff
we can do together.
Yeah. Do it together. And then we'll just wrap and talk about what we think the future's looking like here, because I think we're very aligned
for sure
on what we think's happening in the future.
It's going to be really cool. I'm excited for the actual usage of this stuff. There's been a lot of speculation. There's still a lot of speculation in the market. Very frothy. A little down this morning. But again, crypto changes by the hour.
Right. Like so let's talk about. I want to get your backstory.
Okay.
And understand, because you guys are now an RIA. You're the fastest growing RIA in the world, right?
Yeah, we just crossed 650 billion or 650 million under management.
Congratulations. That's a fantastic milestone.
Wild.
That is wild. Few achieve that great of a milestone, by the
way. That's in 10 months.
That's incredible. Congratulations.
Thank you. Just blown away. Filling a need in a gap in the market, though.
Yeah,
right?
absolutely.
I mean,
providing value.
Exactly.
Yep. So let's talk about your backstory. How'd you get here? How'd you come to be in crypto?
So went to school for finance, University of North Texas here in Dallas, which is where we're recording, and which is a little north of Dallas, Denton, Texas. But didn't actually end up working in finance. I had a very short internship at Northwestern Mutual, and I just didn't like it. I felt like I was selling stuff to people that they didn't need. And they wanted me to, talk to my friends and family, which makes sense. Like,
and when was this? Give us timeline so we can follow.
Probably 2021.
Okay. All right.
Years old.
Yep.
So that's 2000, we'll call it 11, 12, somewhere in there. Yeah. So then, I got out of college, hated it also. I don't like being in one spot doing a repetitive task over anyway. AI
and robotics are
a lot of that being replaced anyway. So did that for a little while, and then went and managed a warehouse here in Dallas, logistics, and solved some problems for them. General
interesting. I did some of that too. I did some logistics stuff too with a 3PL called Speed Commerce.
Interesting.
We have some common. We have more in common than we thought.
Yeah. So this was a VAR. This was a Cisco company. They would do telecom and VRACs for Comcast and Verizon and a lot of large companies in that area. And so, I did logistics for them, ended up moving on from there and went back to Fastenal and ended up, scaling multiple locations for them, worked in sales there for a long time, relationship driven, industrial sales, and did well. I ended up managing the third largest store here in Texas, and then they moved me around to kind of scale up locations.
Is that where you found that you were good with people?
Yes. Well, I started there part-time, still going to college.
In case you didn't know, you're good with people.
Well, shift that. I honed skills at that job for sure. And the CEO there is actually voted, I don't know if he's still CEO, but he was voted the cheapest CEO of any Fortune 500 company.
Quite a distinction.
He was proud of it. But basically you managed the location on your own merit, and they kind of backed you up a little bit.
That's great.
So got a lot of skills there. And when I first started working there, the sales guys were just driving around trucks and going to talk to people. And I was like, they get paid to just
drive around
and go talk to people?
Yeah.
And they were like, yeah, well, you got to sell stuff.
Yeah.
Are they going to buy it anyway though? And they're like, well, yeah. I'm like, that seems fun and pretty easy. So anyway, I took the initiative and brought on some accounts and ended up scaling me up. Anyway, long story short, managed multiple locations for them, got acquired by another company to help them grow their business, doubled that in a year. And this is around 2020 and 2019. And didn't end up working out there. They, people promise you things and then don't come through on
It
it.
happens.
And that's happened a couple times in my career. And after that one, I decided nobody else was going to decide how much money I make. It's going to be me. So I took my own initiative. And about that time, I actually, started investing, and the stock market fell in 2020. So I started consulting, doing some M&A, took the Value Builder course. I don't know if you know who John Warlow is.
No.
He wrote a book called Built to Sell. And it's about how to build your business so that you don't have to work in it. And it's an enterprise that you can actually, sell off.
Work on the business, not in the business.
Yeah.
That's the summary there.
Exactly.
Yeah.
Which is hard to do. It's a lot easier said than done. But I consulted with some blue collar guys that I was working with at the time, selling them stuff, moved over to that side, helped them scale their business and exit. And that's when I found crypto. I was, the stock market fell. I had saved money for a house for my wife and I. And I'd put that money back. And when the market fell, I jumped in. I watched my dad miss.
When was this? When was this?
2020.
2020. Got it. Cool.
I watched my dad miss American Airlines when it was like
free.
Yeah, like 79 cents.
Wow.
Like days before they were going to go bankrupt, he had $100,000 sat on the sideline, and he was all we had left, of his retirement and everything at the time. And he was like, I think they're going to get bailed out. He pulled me in the office and told me, and I'm like, roll it.
Roll
like,
it.
What?
Yeah.
What do you mean?
Yeah.
And he's like, if we lose this, like we lose the house, we lose everything. I can't. And I was like, well, just put 10 grand in, something. He didn't end up doing it. So I watched him miss that opportunity. So when the market fell in 2020, I was like, this is my shot, man. So I rolled, and I'm younger. I'm
A little more risk.
29 at the time.
Tolerant. Yeah.
Yeah. So longer time horizon, higher risk tolerance. So I roll it all in. I take my 401k from Fastenal, roll it to a self-directed IRA, and I just bought Amazon, Google, Tesla, Facebook.
Yeah.
Diversified across those four. And I was like, okay, like these aren't going to go anywhere. I think they're going to rebound. We'll see what happens. And they did. And so rode that back up, and April, May, June, I start the market's looking back to where it was before almost. It rebounds very quickly. So I double my money, and I'm like, okay, I need to de-risk, and probably diversify and get out of these positions. And so I'm looking at gold, I'm looking at real estate, I'm trying to learn as much as I can about
enter crypto.
Yeah. So I watch a debate between Peter Schiff and a Bitcoin guy. I don't even remember who the Bitcoin guy was, but it clicked for me that this stuff is software and it's the next iteration of the internet. It's how value moves. And I was like, oh, that's why everybody was so crazy in 2017. My brother turned like $5,000 into like $200,000, and he didn't sell it, and it got rugged.
Yeah.
And I was like, I felt vindicated. I'm like, it's a
That was
Ponzi
right.
scheme,
Yep.
So anyway, I'd start doing research and looking at the companies and the projects and protocols and problems they're solving. And, I analyze crypto the same way I do stocks. I'm looking at the total addressable market for the problem they're trying to solve. How much of that can they get? What's the value that's going to move over the protocol? What's the use case that they're solving? So I really didn't get much Bitcoin. Actually, the first thing I ever invested in was Chainlink. I was like, okay, this is an Oracle moving data on chain into smart contracts. This makes sense to me. So I got 13 different positions, and took all the money that I made in stocks, which was pretty good, and rolled that in on those 13 positions and went deep, and got in before the bull run in 20 and 21. And
rode the wave, as they say.
It's wild to watch your portfolio. You go to dinner, look at your phone again, and you're up another couple $100,000, and you're like, what is going on right now? So at the top, I'm like, all right, this is way more money than I've ever had. I need to figure out how to make sure I don't mess this up. So I started calling around all the professionals across the US that said they dealt with crypto on their website. So CPAs, accountants, wealth managers, estate planners, tax
and there was
attorneys.
a gap, right? You found a
huge.
Yeah.
There was nobody. I mean, we whittled it down to the 15 people we work with now. But at the time, I mean, I'm calling these people and they're like, yeah, we had that client that had some Bitcoin one time.
Yeah,
We helped
yeah,
him. And I'm
yeah,
like, do you even know what Bitcoin is or
yeah,
like the tax rules around this? And they're like,
yeah.
well,
We'll
we
figure
helped
it.
it. Yeah.
We'll try it.
Oh, geez. So anyway, I find the people that help me
Yep,
set my estate up, make sure my stuff's
yep.
protected, anonymity, mitigate taxes, everything.
Mm-hmm.
And I get on Twitter and I start talking about, doing all that stuff, how I'm protecting my assets, how I'm mitigating taxes. People were nice enough to have me up in a couple spaces, and people were like,
This is different. This guy's different.
yeah, what do you mean
Yeah.
you can do that stuff with crypto? Nobody's doing that stuff with crypto.
So you went into the traditional finance
Mhm.
kind of realm, same as us. Same as us.
Yeah.
I mean, very very similar to us. So okay, a great story because that kind of gets into we both came here for very similar reasons, which is we saw a tremendous shift of value
Right.
into a new financial paradigm, like a significant shift. And look, I mean, look at what's happening with all the laws being made. One of the things that I kind of like to point out is that America won the internet for however you want to look at this. And not a lot of people know why. And I have a theory on why. I think it's because Bill Clinton, for all that they maybe didn't do or all that people thought we could have done differently, one thing that he did do, and this is why I think Al Gore says they invented the internet.
Yeah.
That's a phrase, but what he really means is they came out and they on the first government website ever for any government on the internet, they put the 10 reasons why America will win the internet. And it was things like government's going to get out of the way. We're going to make it open and accessible. And then we won the internet because
Yeah.
everybody came here because it was the easiest place to do something new that nobody knew about.
Right.
And I think we're in that exact same spot. And Trump, for the same, like, regardless of what you think he could do different or better or not doing right or doing great, the one thing that we are doing as a country right now is leading the way in Web3 crypto infrastructure. And we're making it so that this is the place you want to be. And I think we're gonna lead the world in, stable coins and value and all these things. Like all those companies that like XRP, Hedera, they're American companies. They're
Mhm.
gonna have these tax benefits. I mean, there's
Hopefully we get the, no
Well-
capital gains.
well, I mean, I'm talking about for the wasn't there already something that they came out with and said that if
In
you're
the
built in America,
Yeah, Big Beautiful Bill had some stuff that referenced to it, and it talked about software, but it didn't specifically state digital assets or crypto. But I do think that we're going to get some
I think we're
regulation
going to get some.
specific.
I think we're going to get some. So, we both saw that the world was changing, that this was the place to be, that new value systems were going to get created, and that the world was going to fundamentally change. And there was a way to, there's a way to make money, there's a way to set up yourself for success, but there's also kind of a fundamental shift happening just in how banking works and how value works, everything.
Yeah.
That was the thing that the internet didn't have when it first came out, was the ability to fundamentally transform how they still had to use the intermediary.
Mm-hmm.
And we're getting rid of the intermediary.
PayPal had that vision, right? Like I mean, you have the PayPal mafia, and you've
Yep.
gone on to see what they've continued to create
Yep.
with Elon and everybody else that worked there. But they had that vision that you could move money seamlessly without an intermediary, and that's exactly what this does.
But there was still a bank behind the scenes to off ramp and on ramp and
Yes.
create that. And now we're getting to where these systems can change. I think one of the things that's also happening is the value stripped off of the middle.
Mm-hmm.
That's also going away. I think we'll be out of credit cards and plastic credit cards issued through two companies. I think we'll be off of that in like 5 years.
It'll be interesting to see how they kind of transform. I mean, because I don't know that they go away, but maybe
They don't go away.
So the margins that they have today are built on, the 2 or 3% they're charging everybody on either side of those transactions to be able to facilitate that. But if you have significantly lower costs for them and they're able to leverage this technology, we know that, both MasterCard and Visa have spoken at Ripple Swell and other large
absolutely.
fintech events. They're fully aware of this technology and what it's going to do. And also the volume of payments across their infrastructure would be able to scale not infinitely, but much further.
Potentially, because you could spin up blockchain after block, shard after shard after shard. I mean, I don't know, it's infinite, but yeah, it's probably bigger than we can fathom.
Right. And so now you're clipping, if even though it's less fees, your costs have gone down substantially, and you're clipping, some bips, just a couple basis points on every one of those transactions instead of, percents. So you get a huge benefit for the total economy as far as inflation goes. That drops substantially.
But it's not just the Visas and the MasterCards. I don't think that's the real value aggregators of the system. It's the all the middlewares around it that you have to go through. So that's what, to me, like I was talking with a Dr. K from UT Dallas, the fintech professor over there, and he was like, yeah, I don't know if this stuff's going to take off. I said, well, let me just paint this picture for you. If I right now, even with the best of technology, it's going to take me a week to spin up a website, to get a bank account, to get a merchant processing account, to get it approved. And if you're in crypto, forget it. It's going to take you maybe a month to do it. But with a stable coin, I can literally tonight in an hour be done with it. And he was just kind of like, holy shit, I never thought about that. So that's a fundamental change in all those people who are trying to be gatekeepers to value, to shared value. Those people are falling away. They're going to fall away. So I think that's what's going to fundamentally shift is.
What do you think about Stripe?
I think that companies like that are holding on. Now, the reason why they have such great market penetration right now is they kind of democratized easy access to those banking rails and to those payment rails. But when a merchant processor that no longer needs that terminal, think about the evolution of the terminal. That's what we're talking about here, the point of sale terminal. The point of sale terminal, you remember, I don't know if you're old enough for this, but I am. They used to have these machines where they'd take your plastic credit card, put a piece of, and the lady would have to literally like get her whole body in, know, and then they'd settle days, weeks, months later, and then that evolution. So I think that the evolution of the point of sale is what's really going to drive kind of this next wave of evolution. And then when you can just do it on your phone. So we have first world problems, right? Like I'm down in Bolivia, I'm down in Mexico, I'm out in Africa, I'm in the EU, and I'm seeing the countries that don't have. So we have to justify. We've spent years building point of sale systems and cell systems and all these things. So we had to go from phone lines to GSM to 2G to 3G to 4G to 5G, and we've got to extract maximum value as capitalists out of those systems. In Africa, they didn't get all that. They just went from rotary phones to 5G. Direct to 5G, direct to cell phones, right? Or direct to Starlink. Like now they're just zooming, like everybody has internet because of Elon. And so when you look at the first world problems we probably have a little longer path to get there to evolve the point of sale. But in Africa, they're just paying each other with Bitcoin.
Right.
They don't even use anything else. They just skipped right over all of it. And so I think the evolution of the point of sale happens a lot faster. But because America is leading, and because the US stablecoin opportunity with things like Ripple and international settlement. So we're partnered with Ripple on international settlement into Mexico, into the EU, which is really fucking cool because it's fucking instant, right? And we plug that right into banks. But the opportunity internationally for American companies to power international settlement in brand new ways and local settlement, circular economy, local settlement is unfathomable. It's massive, right? And it's down at the consumer level. It's not just at the, right now Chase is using it for bank to bank, $1 trillion settlements. That'll still happen. That's cool. But when you can go into a country in Bolivia, into Cochabamba, and go into La Paz and have these people I'll show you guys, we'll post it. I walked into the airport, the La Paz airport, international airport. Do you know what everything was denoted in the duty-free store?
USDC. Oh,
Tether.
Okay.
So you know how you paid over there? With your crypto wallet. You walked up, you scanned a QR code, boom. And it wasn't a point of sale. It wasn't a Stripe point of sale. It was literally the company's wallet, their self-custody wallet. Wow. Is that not fucking crazy?
Well, you're democratizing access to banking services.
That's exactly
that's
it.
The whole.
That's without having to go open up a bank account.
Yeah, KYC, right? AML. You still want that stuff. You still want
and
that
it
stuff.
still happens, and it still happens. But this is where I think that's why I think America, look at what Argentina's doing. They want the dollar. Everybody around the world, not just the dollar. I mean, people want the euro too,
Yeah.
and people want, but these rails, they're boundless, they're borderless. The Ripple rail,
Yeah.
It's not like the Fiserv rail that only exists in the continental United States, right? And if you want to use it, you got to go get permission for it.
Mm-hmm.
That's the fundamental difference here. That's the fundamental value being created.
Open source network that anybody can tap into and leverage.
I think we underestimate the opportunity to clone Ripple because it's open source and create your own private network that checks to the public network. So that's the infinite scale that we're talking about.
Yeah, Corda does that. Ripple does that with the banks and intermediaries. We haven't seen that done for peer-to-peer payment systems.
It's happening right now. That's what we're doing.
Well, there you go.
Yeah. That's what we just got back from Chicago on, and it's multi-rail, but we think that, like I was saying with the Ripple international settlement, we think they have to be interoperable. Absolutely. Right. So private settlement rails, peer to peer, but at some point you got to use them somewhere. At some point you got to use them somewhere. Right. I don't think there's going to be one coin to rule them all. Like the people who say it's only Bitcoin. I love Bitcoin. I think it'll be around for a long time. It'll be a part of the economy. There can't be. I mean, nature has proven time and time again that one species does not the only thing that exists ever.
Well, you symbiotically exist together, right? Like if we didn't have forests and people, like carbon dioxide and oxygen, like
we would die.
Yeah, you have to have the other. So I think that Bitcoin hasn't found its I don't want to say anti-Bitcoin, but its partner. But I think that might end up being the XRPL.
What explain that? You're saying that Ripple being a kind of a side chain or a sub chain or something like that, a check chain.
Yeah, I mean, if you've already seen the Lightning Network and some of these other things spin up around Bitcoin to be able to allow it to scale to greater amounts of payments, faster settlement, all those things, the original vision that Satoshi had. And if they had increased the block size and not stymied that and, forked into Bitcoin Cash and Bitcoin, it might have got there. But right now, it's still super energy intensive. There's a lot of things that go along with the Bitcoin infrastructure itself to be able to settle Bitcoin.
But there might be value to that.
For sure. There is definitely value to that. There's ancillary components to, we just got back from DC. I was there for Crypto Week right before the bill got passed. And, I was in a cohort of people that went around and talked to congressmen with the CEO at American Bitcoin. So he was telling me about all the things that they're setting up for substations and all the additional power. And
I think it's what I call Bitcoin is maybe the best battery that's ever been invented for humanity. Think about what it does. You can offtake. So people don't realize that, like here in Texas, do you remember the winter Stormageddon, whatever? So when that happened, everybody's power went out because it wasn't because we didn't have capacity. It was because we didn't want to have all this excess energy just dying, like running coal powered plants, that the energy was going into the ether, right? Into the vacuum. But now with Bitcoin miners spinning up, we've got the capacity. This is a true story where Bitcoin miners are powering us through winter storms. So the excess capacity is there. The Bitcoin miners what business do you know that can just scale itself down and scale itself up?
Power plants, but that's about it.
But that's almost like a commodity.
And then, again, this kind of goes back to the industrial cell stuff, but steel mills.
Actually, hold on, Jake. I would argue that's why it couldn't happen in, not to say you're wrong. They can scale up and scale down, but when the the water lines are frozen at a coal. It can't do it in a second. No. So if you can keep the power on all the time and the Bitcoin miners can just say, divert the power in real time. Holy shit. Now you've got a resilient battery powered network. So that's why I think that Bitcoin could stay around. But does that mean it can power every single experience in the future that we need, that needs this immutability and repeatability and traceability? No, I don't think.
Every chain has its own benefits and drawbacks, right? There's pros and cons to almost everything. And you're going to use the tool that's most efficient for whatever it is to get the job done. Exactly. And that's why there's been this proliferation of so many different blockchains that are attacking different use cases. And some of them are super niche. Right, like we talked about merchant payment services. You've got Stronghold that's in that area. You've got peer-to-peer lending, like Aave. Right. Yeah. There's a lot of things that people have spun up and created that are specific to a certain thing. And there's definitely value in that. The riches are in the niches. Is that what they say?
Yeah, yeah.
But I'm here for ROI. So I'm trying to look at
Maximizing ROI though,
correct.
right?
Yeah.
And so that's why we came into the cooperative banking space, because the opportunity to maximize ROI, this is the way I try to describe it is, every fintech that you've ever interacted with is on top of a bank. They are not a
Mhm.
bank. And so those fintechs that are not banks, and even when you have a shareholder driven bank, the values are misaligned because the shareholder has to you're as a CEO, your fiduciary responsibility is to the shareholder, not
Right.
to the customer, right?
Right.
That's just how it works.
Technically,
That's
yeah.
technically how it works. I mean, yes, you have to make the customer happy, but with cooperative banking, the fiduciary is actually to the customer because they are the owner.
Mm,
That makes sense. So it much more closely aligns with the ethos of DeFi. Cooperative banking
okay.
much more closely aligns with DeFi because what you're trying to do is maximize your ROI.
Mhm.
And if there's intermediaries with anti that are
Against the
and not necessarily against it because they hate you, but because they have a fiduciary responsibility
Right.
somewhere else, then that's kind of antithesis what you do, right? But if we say not what you do now, but I mean
Right.
what our goals are,
Right.
right? But if the networks we're built upon are built for us because their fiduciary responsibility is to us because they're cooperative networks, which is what to me DeFi is about.
Mhm.
DeFi is about a bunch of people getting together and sharing value
Right.
directly with each other, utilizing these blockchains to reduce the intermediaries. That's why we went to cooperative banking.
Interesting.
Isn't that cool?
That is cool. Reminds me of like a DAO, right? Like
It's a fucking DAO, bro.
yeah.
Like that's why we created the BankSocial DAO. The original vision for this was we created the BankSocial DAO to do exactly this. And then I didn't even know what a credit union was. I thought you had to have good credit and be part of a union, and then you got in somehow. You know?
Yeah, I mean that makes sense.
Right? Makes sense, right? And I don't think people really know what cooperative banking is about. The difference is it's still a bank. It
Mhm.
still has Fed master accounts. It still can move money. It still can do lending. It can do everything a regular bank does. The only difference is it does it on behalf of the consumer as the fiduciary.
Right.
And that's why when you go in to get a car loan, if you got great interest,
Way cheaper at a credit
Credit
union
union.
versus a bank. Yeah.
way cheaper. We're talking like 1.5, 2
Yeah.
points. No matter if the market's up, down, side, left, right, it doesn't matter. It's always cheaper, and it's because there's no derived shareholder value. And when you look at those rails, like these are fundamental rails to life.
Mhm.
If you want to go eat today, you got to use a banking
Mhm.
rail. If you want to go put gas in your car to go eat,
Same thing.
same
Yeah.
thing, right? And so these are like fundamental to life, and they should work for us.
Yeah, you should be able to exchange value freely. And people have been trying to figure that out for the whole time we've existed, right? They had the barter system, and then there were seashells, and then they had gold coins.
Wampum.
Yeah. Money's been a bunch of different things over, the span of, and then they've, I would say perverted, that's not the right term, but devalued currency over and over and over again. They'll make it out of a certain metal or of a certain alloy, and then they mix it with nickel and like try to, do that. And then now they've done it with fiat. So this is just the next iteration. But that's the other beautiful piece of this. You have a finite amount of some of these digital assets, including Bitcoin and XRP, that you can't create anymore, right?
Absolutely.
No human can corrupt this system.
Absolutely.
So I think that's why you've seen a large portion. Well, what's 1 in 5 Americans?
Shit, it's
own
more than
crypto?
that now. No, it's more than that now. We're seeing like 40 fucking percent of
Wow.
Americans. Now that number is probably like, yeah, a baby doesn't own it, so it probably is more like 1 in 5. But anybody who can push a button, if you're old enough to push a button and need to go buy gas and do
Yeah.
this, it's 40% of those people
Wow.
are tied into crypto.
It makes sense though. Like you can actively see that your money isn't going as far as it used to. Like your house is twice as much as it used to cost just a few years ago. Eggs at the store are 4 times as much.
Well,
Like
forget the cost. Just think of how hard it is to move money, to pay people sometimes. Shit. I mean,
yeah. We send international wires and do a bunch of stuff, and it's like USDC's way faster.
pennies,
And I
and
can do it on the weekend.
24/7. And you could, we've got like a use case right now where we're helping financial institutions send money internationally. So to Ukraine, it costs $45 to send $1 to Ukraine. So these family members are like having to stagger out when they can send money
Mhm.
because they have to wait to send $500-$600 because you can't send 50, can't send 60.
Right.
It doesn't make sense. You can't do it literally.
Each the whole what you're trying to send in just the fees.
Right. So if mom in the Ukraine needs eggs, you have to wait. You can't send her $20 or you got to send her 500. You got to send your whole check. I mean, that's the state of the world right now. And again, as a first world country, we don't see a lot of those
Right.
problems. They kind of just flow in the undercurrent. But
Yeah.
these are real problems. And guess how we solve that? Through a combination of technologies like Ripple,
Yeah.
like Hedera,
Yeah.
right? Explicitly, when we settle to Mexico into a bank account, we settle in through Ripple.
Yeah.
You know, but it is multi-dimensional. It is something where I don't believe Bitcoin, let's forget Ripple for a second, Hedera and all these other chains. Bitcoin can't solve all the world's problems.
Right.
We can't become a one world Bitcoin currency. It's
Well, and the amount of energy that would be required to settle all of that is way beyond the scope of what we can even produce today. So, yeah.
Absolutely. So let's transition into some of the stuff we've been working on together.
Yeah, would love to. So, you send money. Sometimes it gets taken from you in crypto. Sometimes it's unintentional. Maybe you are fished or somebody gets access to your stuff. And this is going to happen as long as there's self-custody, right? And so, we provide institutional custody. There's a lot of checkpoints, but there's still exposure, right?
Yeah, I think you can't. Our philosophy is, I don't know of a system that can 100% protect the person from themselves. We've seen scenarios where with AI, some person in the institution gets convinced that her boss has called her. This is a true story.
Mhm.
Her boss has called her. She's in, I'm not going to name platform names, but she's in a platform that it's not one of the ones you use, by the way. It has every institutional security mechanism and capability available. It's impossible to protect the human from the human.
Right.
It just is. That's just the nature of things.
There's going to be human error.
There's going to be human error. There's going to be human misunderstanding. Like, did you hear the story? This wasn't a crypto story, but a treasurer at a company was invited to a Zoom meeting. They recreated all like 4 people with AI, did all their voices and convinced the treasurer to wire. Go look it up. Don't take my word for it. Convinced them to wire not just like 10,000, 20 some million dollars to a bank after a 45-minute Zoom conversation where they talked about the opportunity and what they're doing, and they all agreed that this was all fucking AI, Jake. It's a true story.
Wow.
Yeah. Yeah. And they weren't able to repatriate the money because the vast majority of it was gone. Once it goes into, I mean, the kind of the benefit of crypto is we can track it, we can create it, we can pull it back. Like we can call Tether and USDC right now, and they'll freeze it.
Right.
Right. So that's why we got together to create Secura, because it's certainly the systems that you guys are utilizing are the top of the line, the best institutional custody, and you're protected from 99.99999.
Well, it's just like you go to the bank and they're like, hey, sign this document that says you understand that you're sending this money to somebody else that you know, and they ask you all the questions. How did you
exactly
get
right?
This information? Who's the background on this person? Are you sure you want to do this?
That's exactly right. And that catches 99.99999% of it, because nobody can just walk in and spend your money. And and with self-custody, depending on how that's set up, and most of the time, if you leave your password somewhere, if you leave it, it's gone. Right? It's gone. And institutional grade is definitely where you should be storing big money, wealth, things like that, for sure.
Well, that's why BNY Mellon's been around for as long as they have, hundreds of years, well, not hundreds of years, but over 100 years. They have the most assets under custody. They've just recently, announced that they're partnered with Ripple as well. And, once you get over, I personally managed a large amount of crypto myself, in value. But I wanted it secure somewhere. I wanted my wife to be on the account. I wanted my child to be the beneficiary. My wife doesn't know anything about crypto. Like, she knows enough, but she couldn't send from a cold wallet to an exchange.
That's what I was gonna say. If you had like a cold wallet in your safe and she didn't know about it, like, good luck, it's gone.
Yeah. And so we provide a Schwab account for your digital assets. We're an advisor. We make sure that you have opportunities, you have liquidity against it, all the stuff that you would want, for your digital assets, and then additional security beyond that. But to your point, if somebody decides that they want to send it to somebody else, it's their money.
It's there,
And
and you can't stop them. And that's
say,
what we run
okay.
into banks.
Yeah.
I mean, look, banks tell us all the time. It's like, we can only do so much. We can't, even if we know it's fraud, it's their money.
Right.
Legally, you have to let them send it. You could put all the warnings and everything, but at one point, if that person says, I don't give a fuck, I'm sending it.
You say, okay,
You got to.
it's
Right?
yours.
It's your money. Yeah. Good luck.
And that's how it works with us too. It is your capital,
Yeah,
right? That
exactly.
we're helping you manage. We provide a lot of services and benefits and the custody and insurance and all those things. But at the end of the day, this is your account. It's your crypto. And if you tell us this is where it's going, we say, yes, sir. Yes, ma'am.
Right. And in that 0.00001% that happens, because look, there's trillions of dollars, right? There's trillions of dollars being held in crypto right now. And, a percentage of it, which sounds like a big percentage, Kyle Hopman of the NCAA, he's such a great orator, but he says that if you think crypto has a lot of like illicit activity, wait until you hear about this thing called cash.
Yeah.
He loves to say that. And he's right, so for all the money that's being, pilfered out of the it's not a massive percentage, but it happens. And the thing about crypto that's different from a bank is when you get your money stolen out of a bank, right? Like somebody you can call, at least you have the value of knowing you can call. They might not be able to help you.
Right. But you got somebody you can call.
You got somebody who you can call that can give you some assurance that they're doing something to try to help. But crypto doesn't really have that. And so that's why we've gotten together and we've created this Secura product. We've put something in the hands of people, but we've also been successful at recovering.
Oh yeah.
Money.
You guys have gotten our clients back a good portion of the money that they've lost.
Of the very small few that have,
that small, 0.001% of stuff that does happen. Most people are pretty good with their passwords and seed phrase, and they, have multi-factor authentication and other things in place to be able to mitigate the risk of loss at this point. Like it's become much more secure than it was, but at the same time, people still get phished. They click on links in their email. Somebody gets access to their Google account. Things happen.
That's exactly right. And so we partnered together as you guys are the first RIA, the only RIA doing it, where in the absolute worst case, and even before the worst case happens, having that peace of mind of knowing where to go, just puts you in such a better state of mind. If in the worst case, or even when you're, your assets are there and they've got some protection on them, that on top of all the other protections of institutional
we got
custody,
somebody that can freeze that account and find that money and get it back to you.
And get it back to you. And we kind of think of it too, like 50% of the work we do at Secura is having somebody to talk to, because it's painful. You got a couple $1 million and it's gone. And you don't have somebody to talk to who can tell you what's going on, where it is, what we can do. It's painful.
Right.
Because the FBI doesn't, I love the FBI, right? But they can't answer every call. They don't know who's real. I mean, I heard this thing the other day. Check this out. This is fucking crazy. There are attacks happening on 911 networks across the country right now. These crime networks, they'll put war dialers on the 911 call centers and call in with AI.
It's a bunch of fake
reports, and then they go break into a house.
Okay. That's pretty smart. I don't like it.
Well, neither do I, but this is what's happening.
Yeah.
Right. And so, how do you, as the police force, how does the police force help? Same things happening. We've had people who've had their money. So our BankSocial token has had a freeze. I like to say I maybe invented the first freeze functionality in a token in a smart contract back in 2020.
Oh, wow.
Right. And so we've been able for years, whenever hacks happen, we have systems that are watching different mechanisms and that freeze the token so that your token doesn't get distributed. And we don't catch it all because it's not possible to catch all of it. But from that, we started seeing like the hackers would actually go, or the guys who are phishing you, they would go make police reports and send us the police report saying unfreeze the money. But they wouldn't do the KYC. They wouldn't do all the other things that
Right.
you
That
have to
would be
do.
required in order for you to actually unfreeze it.
That's
Yeah.
right. That's right. They go file some IC3 report, some online police report. And so now, as the FBI, how do you know who to respond to and
Who's right? Who's wrong?
who's right, who's wrong, right? And so that's kind of where we think at least 50% of the value in what Secure provides is you got somebody to talk to, you know they're there, they'll pick up the phone and they know exactly where to go and they know exactly how to kind of direct you through the next 24, 48, 72 hours.
Well, I want to make a point there. The faster people get a hold of you, the more likely it is that you're going to be able to recover their assets.
Or you guys, right? The
Yeah.
faster they can reach out to you. I mean, because at the end of the day, it's about getting help as fast as
Yeah.
possible. Not that we do it on our own or you do it on your own. We work together
Yep.
to get them to the.
But you know who to call.
You know who to
right?
call.
You have somebody that's there in that horrible situation at a time that can help you when you need it.
That's exactly right. So that's what we were excited to announce last week and a half ago.
Yeah.
But it's all good because now we've got it and we're working on some even cooler stuff that you'll be able to
Share with
talk
people.
about whenever you're ready, whenever we're ready for it. But yeah, we're super excited to be working with such a great team of people like you guys.
Same, man.
You guys have a really fantastic team over there. You know what you're doing. You're bringing together. I love the fact that while you guys are really focused on the value that XRP brings, because it brings a tremendous amount of value, there's no doubt about that. You haven't been maxi in your approach to the market.
And all, I mean, it's all I own, right? But I have a small allocation in hash, which is on provenance, but I'm here for ROI, but I understand all these other networks too. We've talked to people that are using Hyperledger, people that are using HBAR and Hedera Hashgraph. A lot of people are leveraging Chainlink for different things. Like there's tons of other networks that provide huge value. And we manage, Bitcoin, Ethereum, Solana, Matic, Chainlink, Avalanche, XRP, XLM, working on HBAR.
Sol, Solana.
Yep, Solana. Any EVM based token.
Yep.
Trump coin. If you got a bunch of Trump coin.
Yeah, bring it on.
But anyway, like we talked about earlier, this is going to be an amalgamation of networks that end up working together and culminate in a way to provide the highest level of value for society. And so I want to understand everything that I can about all of these networks so that we can advise our clients in the best way possible. Because it also depends on which, I don't know if I ever told you this, but this would be good for you.
Lay it on me.
So as a payment provider, under Section 179 of the tax code, there are write-offs that you can get against software development.
Mm-hmm.
These tokens are required to send value across certain protocols and networks when you integrate that, right? So if you're purchasing these tokens and you're in certain lines of business and you're going to leverage that for your business, I think there's a way to write them off.
They're not, I think there absolutely is. I mean, when we all of our settlement fees, all of our transaction fees, anything we do on chain, that is 100% a tax deduction for us.
When you purchase the token, you're buying an allocation. It's kind of like inventory.
It's inventory,
right?
That's exactly what it is.
And so you can depreciate that or write it off.
That's exactly right. Because, depending on how you use it for a business, if you're doing it as a pure investment and you're holding, then it doesn't apply. It's different. But if it's a tool, if it's a software tool, and that's such the interesting thing about these systems, right? Is they're both I mean, we don't do it for investment. We, as BankSocial, we hold zero investments, right? It's all as a tool that we use, right? And so when we go out and we hold a bunch of Ripple. And so whenever we settle on Ripple, we utilize that as the tool for Ripple, right? For settling on the network. And so that's not a capital gains event for us because we didn't give a shit that it went from this value to this value. We needed that to perform our business transaction.
Correct. So if you're in insurance and you want to tokenize your insurance contracts, if you're in real estate, you're in a title company and you want to work with Proppy and you buy a bunch of Proppy token.
Absolutely. Like mortgages, on-chain mortgages, mortgage brokers. I mean, we're seeing it, payment providers, point of sale providers, eventually identity providers. Everything is going to be, I mean, literally everything will be tokenized. Because right now, if we look, we would say if we were, 30 years ago, we would be saying everything will be digitized.
Yeah, on the
And
internet.
and now it is.
Yeah.
Right?
Like what isn't? Yeah.
What isn't? And so the next phase, well, checks aren't. People still write checks. So sorry to
There's e-checks.
there are e-checks. No, people are we actually we think it's funny. The other day, one of our guys who works here went to Becky's mom and was like, Mom, where do I get a check? Like he had no idea what
Banks will still get them for you. They're expensive.
Ah, shit, they are. But 25 years ago, 30 years ago, we would have been talking about everything being digitized.
Mhm.
And people were like, this internet thing is going away. Now we're talking about everything will be tokenized, and it will. It absolutely will. 99% of what we do will be tokenized.
It'll become easier to transact. There'll be less friction. It'll be faster. It'll be cheaper. And that's capitalism, right? The world is going to move through to the least friction point. Whether banks and institutions or governments want that to happen or not, general society is going to look for the fastest way to transact. And
That's
so
right.
if we don't, to your point earlier, become the leader or are the leader in the adoption of this asset class, the rest of the world's just going to leave us behind. And they've already
That's
kind of
right.
started doing that before Trump got into office here.
That's right. That's right. And I think a lot of the, the reason why a lot of the capital gains discussions were taking a heavy kind of first approach at how this stuff was going to be regulated is because it was looked at, not saying this is wrong, but Bitcoin, right? It was looked at as Bitcoin. And when you look at Bitcoin, you can't use Bitcoin itself to settle instantly across the world.
Right.
You can use it to settle in 30 minutes. That might have use
Thank
cases.
you for pointing that out, because a lot of people are like, it's faster than that.
Well, a lot of people think so I think the funniest thing is that I've had a few discussions. I won't call them arguments. I'll call them discussions where people are telling me, well, Lightning. And I said, well, Lightning's not Bitcoin. Lightning's a completely different thing. It's a completely different code base. And but this is what's driven until just the last kind of 24 months. Because that was kind of the primary thought process is, well, this is like a Bitcoin. You can't use it for anything. But now we're seeing use cases where, no, it's not like a Bitcoin. It's literally something you can use day to day, second to second, millisecond to millisecond. And it's more maybe commodity or even just infrastructure, just pure infrastructure. Like I kind of look at it as I don't pay taxes when I buy Google Cloud credits and it costs more to buy Google or less, like, oh, I just got more. My cloud credits go longer now. Do I have to write that up or write that down? No, I don't. I just use the credit and I pay for the network infrastructure, and that's what it is. And when we go and we talk to regulators and we talk to these people kind of looking at this, that's the way I go in there. I say, guys,
that makes a lot of sense.
You're looking at this from the Bitcoin lens, and from the Bitcoin lens, it might make more sense to say, hey, if you bought it at a penny and it's now worth $100,000, well, there's some capital gains tax, because what else could you use it for? You can't use it for payment. You can't use,
right.
What can
digital gold.
Digital gold. So, okay, maybe in the Bitcoin context, even there, I think getting rid of some of that, especially in the de minimis, like if somebody's holding it, $500, don't capital gains tax them. Shit, But for Ripple, for HBAR, like if you're using it to hold it as an investment, okay, that's different. But as a company and all these things that we're talking about, I think it's just like what I explained with Google. And that's how, and when we tell like our regulators and they're like, oh, fuck, we never thought about it like that. It's like, well, then you should, because that's exactly what's happening. That's exactly what it is.
When it's adopted at scale and people start leveraging it in that capacity and they start to solve the problems within their business using this software and infrastructure, it's on their balance sheet. Cool, it appreciated, but at the same time, I don't think you need it to operate your business.
Just like Google credits. Yeah. When you prepay for Google credits or cloud credits, the cost of compute is changing all the time. Okay. And to me, it's the same economic dynamics that exist when you buy Ripple and it was, $2 yesterday and it's $2.25. Right. You bought an asset, right? Or you put something on your balance sheet, you prepaid for credits on the network. And now all that's changed is the price of compute has fluctuated. Google fucking part 2.
Right.
Google Cloud part 2. What are we talking about? Next topic. Let's move to the next topic. Not you and I, but the fucking regulators. Move to the next topic.
Well, so we're part of these working groups with the Digital Chamber and proposing legislation around, and we want to be at the table because the SEC obviously is our regulator, and so is FINRA, because we're one of 2 SEC registered RAs here in the U.S. that manage over $100 million, and in crypto specifically. So we want to be at the table and make sure that we get governed the right way. But in these conversations, it's become a very apparent to me, and I'm not saying this in a disrespectful way, but the regulators and the people that sit in these rooms don't understand the technology in enough detail to actually regulate it appropriately.
But don't you think over the last maybe 6 months that's started to fundamentally change?
Well, I'll give you an example.
Mm.
So they're talking about tokenization of the stock market on one of the working groups that I'm on. And I'll leave people nameless, but they were like, well, if we tokenize stocks and somebody gets the wrong stock sent to somewhere else, they're gonna have to roll back the network. And I was like,
You don't understand the
It's-
technology.
it's an issued asset. You can just claw it back. All you got to do is put that in the smart contract provision for the issued asset. And they were like,
Well, or like what we're looking at is we white label before, or white list, not white label, white list
The
the
wallet.
addresses, so you can't fucking send it to the wrong ones.
well, yeah, or somebody steals it, right?
Or that's why you white label, you white
Right.
list.
It can only go to that wallet.
They can't steal it.
Right.
Yeah.
So anyway, that to your point, my point, some people are still living like 2017, 2018 with their understanding of the networks and the technologies and the protocols.
It's all the Bitcoin maxis that are trying to. No, I'm just playing. I'm just playing. We love you guys. I'm just joking.
But all of these issued assets and real world assets that'll be tokenized, you can get as creative as you want with the smart contract and how they work, right?
Absolutely.
And I just that progression hasn't quite clicked over with a lot of people that are involved with the conversations. And so that's why I feel it's important you and I and other people like us that are in the industry day to day are in those rooms having those discussions, because then we're able to bring that relevant information to the conversation and it will get regulated appropriately.
And I think what we're seeing is it is
Mhm.
getting regulated appropriately. For all that the again, I'm actually kind of a proponent of the way they've gone about this, because if you look at a lot of the enforcement actions, certainly they've brought a couple where it's like, yeah, that's questionable.
Yeah.
But a lot of the enforcement actions have been against scams.
Tornado cash, like there's a lot of
Yeah, I mean, I don't want to name names, so that's not a person, right? That's like
Yeah,
a
protocol.
protocol,
Yeah.
so it's different. But there are definitely companies who've done scammer shit that you're
Mhm.
like, well, that's a fucking pure scam.
Well, it's unregulated, so you can get away with that stuff here. You will get prosecuted, right? Like
yeah.
if people lose large amounts of money, there's gonna be class action lawsuits and a bunch of other stuff. We've seen Daquan and everything that kind of went down with UST, and now we have frameworks for stable coins that I think are going to be, it's actually pretty good the way that they've set it up. You're not going to get the interest as the end consumer using the stable coin, but it's really going to incentivize banks and institutions and enterprises to hold those US treasuries and drive demand for that product to be able to issue those.
Absolutely. And I think that it opens up the door for other types of tokenized mechanisms for payments, bank-to-bank settlements, tokenized deposits, private liquidity settlement networks that people were afraid to jump on because they didn't understand if they were going to be hammered down by their regulator. And now I think that coming out, I mean, a stable coin is probably the most open and highest for, I say this measured with measured response risk. I think it's way better than dollars sitting under your mattress or
sure.
in a bank account. You can't call them back. It's very difficult. But of all the scenarios that you can have, the stable coin is kind of the most open and the most like, hey, go free and conquer. So the fact that they came out with that first, as opposed to just taking a tiny step and saying, hey, banks can settle in between each other, that would have been like a nothing burger.
Yeah. Well, people need clarity, and they need a way to earn money with this. Like that's another reason that a lot of wealth managers just have stayed out of the space.
Yep.
There's no products or services that they can offer that generate any value for them on their side.
Right.
Which, look, everything's value exchange at the end of the day. If you're in a business, you're there, unless it's a nonprofit, you're there to create value for other people and be compensated for that. And so if there's not a way that they can benefit from it, and that's why the banks have stayed out of it until now they have a product, and Tether's the most profitable company in the world per capita.
Per head count? Oh yeah,
Yeah.
it's ridiculous.
So
$30 million.
You don't think the banks want like their piece of that? You're kidding me.
Right.
So yeah, now that they have some skin in the game and they're going to be able to generate some revenue, you're going to see a huge move towards stablecoins.
Oh, I think so yesterday we were up in Chicago with one of our big partners who's got 2,500 financial institutions on traditional rails, right? Your traditional rail.
Mhm.
And we made a deal with them yesterday to tokenize payments between banks for peer to peer. Yeah. Yeah.
That's
2,500 of them. So that network, we actually launched the some alpha. We launched the first settlement token yesterday with them, live with them, for that intrabank settlement.
That's
And
cool.
it's on both Ripple and Hedera. The token, cool as
Go.
that.
Yeah.
And it's tied to all of our international settlement pieces. So if it's intrabank
Mhm.
between two financial institutions, the 2,500 on their network, it's instant liquidity transfer between them, right? But if it turns out that the endpoint is not one of those banks, it can go, like, say it's international Ukraine, Ripple,
Right.
or MasterCard or Visa. I mean, we've got those rails as well. You can't just throw away the legacy. You know, we got to kind of create a bridge. But dude, the fucking future is so. And what's cool about it is you and I saw the value, and all the people that are part of our communities and
Yes.
part of. I mean, part of
Everybody watching this is you're ahead of the curve.
Oh.
Most people have no idea that,
Ugh.
that any of this is transpiring.
And this is the new wealth creation mechanism. Not just from buying and holding the token, but understanding the use cases
right.
and the value.
Yeah, if you can provide a product just like the internet, right? Like there was so much value. Like you could have invested in the companies that were doing that, but the companies themselves made a ton of money.
They figured out novel ways to implement the infrastructure.
Right.
And it goes back to like that tax thing you were talking about, using the token for payment.
Yeah. Like I've thought that and we have a payment processor that we work with that's a family office that's written their investments or the inventory that they purchased off for XLM and XRP because they see it, they want to work with the counterparty, be able to lend it to that counterparty and then facilitate those payment flows in their business.
So it's a tool for the business.
Yes.
It's not an investment.
Correct.
That's fucking genius. That's fucking genius. Well, we could go on all day. We're hitting the top of the hour on this. Jake, fucking love you, bro. You're doing some awesome stuff, and we're really excited that we're partnered on a lot of this stuff, and we're bringing all this new value to the world. I'll let you have the last word here, and then we'll sign off.
Yeah, appreciate you guys checking this out. If you're from my side and you don't know John, please go follow him on his socials.
Same.
And yeah, I was gonna say
a lot of our communities already. I think that's already happening.
Probably.
Our communities, your communities, they're engaging.
Good. That's what we want.
We
want other good people and resources. And again, that's why we're partnering with John to make sure we can recover your crypto. We'll let you know a little bit more about that in the near future. But if you want to go check me out on socials, this should be on my YouTube channel. We'll post it there. So Jake Claver. And then I'm across all the other platforms as Jake Claver, except for on X, I am beyond_broke. And then for my people, where can they best find you?
All the platforms. I'm President Hodl.
Love it.
And then on LinkedIn, it's John Wingate.
Perfect.
So, and then I'm going to plug my book if you don't mind, real quick. So I wrote a book called The Quantilarity. It's basically a rebuttal to the idea of the singularity, where we're all going towards a single algorithm. I believe we're moving towards an expansive where we have the ability to have our own perspectives, but integrate and connect with an unlimited amount of additional perspectives to create new realities.
The Akashic Record.
Oh, I love that. I need to fucking go deep dive deeper into that. It's been years since I've looked into that. I need to do that again. You're right. That just struck a nerve. That's quantum. Yes. That's what just happened. We didn't go towards this wasn't us going towards a singular algorithm. It was your algorithm and my algorithm meeting in real time and finding new value. That's what we just did.
Love it, dude.
Love it, bro. All right. Fucking thank you so much, Jake.
Absolutely.
See you again soon.
Yes, sir.